Good morning, and thanks so much for tuning in to BQ Prime. This is Stocks in Focus, the show that gets you everything that you need to know about the top buzzers in trade. And it is a bit of a volatile session. That is, of course, the name of the game in the recent past. But in that context, we have a few stocks that are outperforming. Joining me now to talk about those stocks, and one that is underperforming, is Ashish Kapoor. Ashish, good morning, and thanks so much for taking the time.
Okay.
I want to start with ITC because really, from the large cap space, this is the stock that everyone's talking about right now, and it is outperforming right now 15% over the last month or so. Q3 numbers ahead of estimates. What's your rating on the stock right now?
Well, I think continue to hold on. The real good time to buy, of course, was about a year and a half back when it was a contrarian pick at around 200 to 220, 230 range. That was a great pick, and I think if you have bought or you've been lucky to buy in that range, or maybe even a little higher than that, then continue to hold on. I don't see any problem because I think after many years of underperformance, the stock has moved. So while it looks very great on a very short-term period, but most of the investors are reaping the reward of patience in this because for years and years, for about almost 10 years, it did nothing. So in a range. And I really think that I really think more upside on it because if you look at it, it's a company which has a very large scale, a very cash cow business in cigarettes. And no matter what the government might do, or any government might do, or any advertisement might, happen, cigarette smoking is not going to go down. And ITC has the best of brands and best of distribution in it. So that cash generation is going to keep happening. Their foray into FMCG finally started yielding good results, and their margins are improving, which is very heartening. And they have managed to get out of the businesses which were a drag, mainly the retail business. So if it through a sum of parts, I think there is still much more upside because the FMCG business, along with the main cigarettes business and the hotels, the other small businesses, exports plus the paper business, all put together is still having a lot of more valuation than what is in the market cap right now. So clearly, I think it's still a hold. Still see more upside, and I think because it's run up, so I won't say a buy. But if for whatever reason, if it does come to less than 330, 320 at any point of time, then yes, it's a great opportunity, buying opportunity once again. But for the time being, I think if you have managed to, lucky enough to, buy into this stock at earlier lower prices, stay put. I think this is still has a much more upside than what we can imagine. And do remember that's a 10-year underperformance that is now getting corrected. So it can go on for a few years without getting into a real overbought zone or overowned zone.
You pointed out that you're seeing the FMCG business perform, and indeed, I think from the sectoral picture, or rather the businesses picture, agribusiness is the only one that really underperformed in the quarter gone by. And I think over the last several years, Ashish, the commentary was, when will the other businesses start picking up? So that is now happening. What are the key concerns, though? Would you say that on the overall picture, raw materials will continue to be a focus area? They've benefited from lower raw material costs, which you've seen in the form of margin expansion in the third quarter. What are the key concerns according to you?
Well, I think one key concern which will remain always with ITC is that end of the day, it is a tobacco company, and worldwide there is, of course, while I say that, and I just said it, that cigarette smoking is not going to go away, but worldwide there will be always some funds, some issues, and which will always hit the tobacco companies. So that is one risk. And the second, of course, is that at the end, at some point of time, the government will like to liquidate the Suti stake, so that could decrease the supply for a very short term in this stock. That's what I said. I mean, I think at some point there could be a good correction in this stock because of the Suti sale and because of some issue which might crop up because of it being a tobacco company. Other than that, yes, raw materials, it'll keep balancing out. I think raw material, some prices will go up, but because they're in a very wide range of products, I think somewhere they managed to do, in fact, better than if you look at the other FMCG companies. Many of them have faced more costs pressure than ITC has. They managed to do it very well. They managed to control their costs very well. And yes, there would be some challenges in, I think at some point they'll also have to spin off some businesses, which will itself be a challenge.
Yes.
So yes, there will be challenges, but I think broadly, if you're looking at next 2 3 years kind of a time frame, ITC, in my opinion, will trade much higher than what it is right now. It will probably be more than 500 easily. But yes, in between there will be challenges. There could also be, some concern. While you're talking about FMCG, there could also be some concern on the paper. Paper has been doing well in the past, but paper also is reaching a kind of a stage where the prices have started correcting. So there will be some businesses which will not be doing well, but on the whole, I think ITC presents still a very good value
Opportunity.
proposition, and it is going to go much higher than what it is right now. That's my
Let's go to the second stock, Ashish, and that I've identified as 197 Communications or Paytm. And the reason I did is that one, the stock price, of course, is reacting to the Q3 earnings, where they've managed to post an EBITDA profit before the ESOP cost level, and this is something they're guided for to happen in the September quarter next year. So they've achieved this target much earlier than anticipated. Are you convinced, though, that this is a turning point, and indeed things will go better from this point on? And would you say that it's a buy at this juncture?
Well, I can, at this juncture, I can stick my neck out and say that yes, if you are an investor, who's okay with some sort of risk. See, I mean, there is a risk with everything which you do in the market. I mean, there's no such thing as risk free. But yes, with a Paytm kind of a company, the risk is little more because it is still a business which is developing. What they did manage was in the IPO, they managed to sell a very glorious story and get a very high valuation, which has corrected very significantly.
Yes.
And at the present price, I would say that if an investor who likes to take some risk for a very high possible return in future, then this is presently a good stock to buy in because if things do fall in place, this can be a multiplier over the years from this price, with the risk that of course, if things do not happen the way they are hoping, then this could fall much lower also. But if you're comfortable with that kind of a risk reward paradigm, I mean, I would say that this is a good price to enter. The risk reward is certainly favorable, but the risk is still there. And what is good about Paytm is also that the kind of usage which is increasing of digital transactions, digital transfers. In many ways, the UPI and all these things are getting really established very well, with the digital currency also coming in. I think it's getting very accepted in the general public. So the volume for this company will increase, and also there are many other things which they are putting on top of it, including a lot of financial services, financial distribution of financial products, and even at some stage their broking and distribution arms and AMC also is in the offing. So all those things can really add a lot of value. So if you are an investor ready, comfortable with some risk, and looking at a return which is more than ordinary, then this is a very good stock idea at the present juncture.
Okay, let's move quickly to the third stock, and that is Zydus Life Sciences, another outperformer in trade today on the back of its earnings, which have beaten estimates on quite a few parameters. Sales better than expected, EBITDA, PAT ahead of estimates. You have the domestic formulations business that has grown about 14%. There is, however, some impact on R&D costs, which I think a lot of players are seeing. But what's your rating on this particular stock? And would you say again here that it's a buy right now?
Probably not a buy right now, but certainly a hold if you have been holding at lower levels. And I would think that some, because pharma as a sector is kind of putting a lot of pressure, so that could result in some sort of a correction once that the good news is out on this stock also. So, but use the declines to buy. And the good thing, like rightly said, the results are very good, in line with expectations. The company also has a very strong pipeline. There are a lot of launches we expected in US, and the company is doing well. It's one of the very rare pharma companies which has not disappointed. Most of the pharma companies have been disappointing in the recent past. And again, domestic branded formulations business is doing very well. So it's a very, I think, good company, good results. Currently, hold on and use declines to buy. This is what I would say.
Okay. Coming to the last stock, and that's Relaxo Footwear, underperformed today. And I think this is a consequence of what they've been trying to do on the pricing front. In the second quarter, they cut prices quite dramatically across their products, 15 to 20%. And the higher inventory moving out has played a part in this quarter as well. The expectation, Ashish, is that in the remainder of the year and also in the start of next year, things will look better. Are you convinced in that picture, or do you think that one should be wary when it comes to investing in Relaxo Footwear?
I would agree with the latter. I think one should be now very careful before investing in Relaxo. I think there are many better options available. The reason for my worry is that their raw material pressure is very significant and real. It's in line. Vinyl acetate (EVA) is the key raw material which has gone high, and that's put margin pressure, and they are not being able to pass on the cost to the customer. And they're not the only one. Even Bata has been facing the similar pressure. So footwear generally has hit a kind of a roadblock. But I would think that if you really want to do an exposure in footwear, it would make more sense to buy Bata, because Bata has a relatively higher premium segment than Relaxo. Bata would at some stage be able to pass on the cost to the customer more easily than Relaxo. So whenever the turnaround happens, Bata would gain before Relaxo. So if you really have to buy footwear, buy Bata instead of Relaxo at this stage. Even Bata has corrected a fair bit from its highs. That would be the preferred stock in footwear. But like I said, I mean, even if you were to buy into footwear or buy into Bata, buy in a very slow, staggered way, I think there is more pain in the near future. And if you really are looking at other stock ideas, I think there are plenty more better ideas than footwear. But if they are long term, your portfolio, you're looking at adding up, footwear stock and using this correction to add, then in a staggered way, buy Bata.
Just to sum up then, Ashish, we've discussed 4 stocks, one of which you've said is not a buy according to you: ITC, Paytm, and Zydus Life Sciences. Would you be able to rank the 3 in order of your conviction levels?
I would think ITC number 1, Zydus number 2, Paytm number 3, and Relaxo, of course, is not there.
Right. Fantastic. Thank you so much, Ashish, for a lovely conversation. Pleasure speaking with you.
Thank you.
Done.